Alright guys, this is my new look and today I'll be teaching you the most important ICT concepts without the app. Okay, so there's a lot of the app online and I'll be teaching the most important ones and how to use it. So today we'll be learning number one, FEGs. Number two, liquidity sweeps. Number three, order blocks. Number four, change of state of delivery. And number five, SMTs. So this is a large list and I'll be showing you guys this and how to use all of it to your advantage. Alright, so FEGs. Okay, FEGs are three consecutive candles where the wicks make a gap, right? So let me draw it out for you for better understanding. So imagine these are candles. Oops, that's a little fat candle, kind of like some of you guys. I'm just playing. All right, three candles, right? And if you wick of this candle, see, this is a bullish FEG. Wait, not that. What am I doing, guys? So do you see how over here these candles like when you put them together overlap, it does not meet together and it creates this gap. So there's two things that could happen between this gap. It could go so boom, wait, so price could continue to go up, come back, and these gaps are magnets. So either way, it's gonna either reflect off it and it continue going upwards, or it's gonna disrespect it and then just kind of go through it. So either way, price is attracted to these magnets because FEGs occur when there is crazy movement. So crazy either bullish or bearish movement, and within there's a lot of orders that are not filled. So kind of like, this was the best example I found by ICT. It's like, imagine you're painting your wall and you're scrubbing, and it's kind of like the paint is getting not as wet on your roller. You have to dip it back into the paint and continue rolling it so you could coat it again, right? When it starts drying out. I think you guys will know what I mean, the people that painted their houses before, right? That's basically what it is. So price institutions, they want to dip their thing back into the paint to keep rolling it again. So either they're going to dip it back in and it's going to bounce off, or they're going to dip it back in and it's going to disrespect it. These are important, okay? So no good trader could trade without knowing these. Liquidity sweeps, okay? Liquidity sweeps are just prominent highs that have a resting order. So this is a buy side liquidity. This is a buy side liquidity. These are buy side liquidities. So right here, this would be a buy side liquidity that got swept. I don't know, sell side liquidity, sell side liquidity, sell side liquidity, sell side liquidity. And like, kind of like liquidity sweeps, I mean, kind of like fair value gaps, it could either get respected and swept, it could trap it, basically, that's what it's called, or it could disrespect it and continue running past it. So let's say that this was a buy side liquidity price. What it could do is, this is what we want to see. We wanted to see it sweep it and then go downwards, okay? Because we could catch shorts here. Or what will happen is it'll go through here, kind of sweep it a bit, but then disrespect it. And there's an easy way to figure out if it's gonna sweep or not, and I'll teach you guys that later. Thirdly, order blocks. Order blocks are basically the candle previous to a big move to the opposite direction. So over here, this green candle is an order block. Actually, this whole candle would be an order block, but I like to do it just the bodies. Okay, so what happened here is this candle, after this candle, price moved really downwards, so it kind of broke structure, right? And this changes the state of the, like, it's a market structure shift. It shifts the structure. That would be an order block, right? This would be an order block. Wait, this would be an order block. Okay, that's an order block. I don't know. And here, this is an example. This order block over here has been holding up for a while. I actually took 3 trades. I keep clearing it, but I actually took a short here off of this move. I took a short here too, and today I took 2 shorts. Okay, very simple stuff. I'll show you guys how I used it too. Change in state of delivery. This is my favorite. I don't trade unless I see a change in state of delivery. Some people might tell you that's kind of stupid, you're wasting your time, this and that, blah 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 blah. But I don't trade unless I see a change in state of delivery because of one thing. It increases the probability of a setup occurring. Okay, it increases. Is my voice being recorded? Okay. It increases the chances of your setup hitting. All right. So what that means is, let's say over here we saw a liquidity sweep. Boom, liquidity sweep. What we take is the previous candle before a move upwards or downwards, like kind of like a previous candle before a confluence. So a liquidity sweep, order block, fair value gap, whatever. The previous the previous move. So here, the move was towards the downside. So this green candle, once it passes this open, or close, or yeah, open. Once it passes this open, it's called change in state of delivery, and we could look for shorts. We can always look for shorts once we see the sweep, but it just increases the chances. So here, wait, let me just get into it. How you could see if a sweep is gonna occur or not is basically on the 15 minutes or the 5 minutes before a sweep. Usually there's a fair value gap that forms. Okay, I did not actually. I could have traded this, but I was asleep. Or no, I was not asleep. I was out. Basically, do you see how this fair value gap was formed before the sweep? So it swept, and before it swept, it formed a fair value gap. Once you see that this fair value gap got inversed by a candle and it changed state in delivery, so it could happen with one candle, multiple candles. Once you see that change in state of delivery and the fair value gap inverse, I like to take a short. Okay, so the way I figure out my take profits is I take my Fibonacci retracement, put it here, down there. This is, by the way, I call it my entry model. This is the S2T sniper entry model. You take it off of this, put it up here, put the stop loss up there, and target -2 or -2.5, and you could have runners down to 4. See over here, this would have been a snipe. Boom, right? This would have been a perfect trade. Too bad I was out with my girlfriend. Yeah, so those are liquidity sweeps, and that's how you find it, using change in state of delivery and fair value gaps. So you see how they're all adding up. The more you add up these confluences, these 5 simple confluences, the stronger your trade will be. Now, before I continue, I want to promote my Discord server. It's completely free. Okay, it's completely free. We goof around, we teach each other trading, whatnot. Just join. The more people, the better it is, because the more I could learn, the more you could learn. Alrighty. Also, if I'm going too fast with these concepts, I'm creating a free kind of course, kind of like the ICT model or mentorship, kind of the ICT mentorship. I'm creating it for free, and I'll teach you guys everything, right? I'll go through everything in more depth. SMTs are magical, okay? So basically, it's when you find 2 correlating pairs. So let's say gold and silver, and silver goes up, but gold goes down, for example. Yeah. I can't find any like clear examples that I could show you. But yeah, so okay, whatever. I can't find any like clear examples, so it's easier for you guys to see. So I'll just use kind of drawings again. So there's correlating pairs. Okay, so if you're trading Forex and you're trading EU, like Euro USD, a correlating pair to Euro USD could be GDP USD, right? Or Euro JPY. I use GDP USD. So you find these correlating pairs, and the reason why they're correlating is because when EU goes up, GU will go up too. When NASDAQ goes up, the S&P will go up, right? Or ES. When NQ goes up, ES goes up. So they're correlating. Mostly, maybe there will be like slight changes, but either way, it'll have the same destination, right? That's why they're correlating pairs. Now, what could occur is this is an SMT divergence. So let's say NAS broke a high, and now we're in the uptrend, right? But yes, it didn't break the high, and now we're in a downtrend, right? This is an SMT because one is going upwards and the other is going downwards. Do you see what I'm saying? So this would be a amazing confluence to add to your trades. I bet, okay, maybe I'm not betting, but if I look at the 15-minute over here with silver, I'll probably see an SMT because where did that happen? This happened 27th at 1945. Okay, 27th, 1945. So silver over here is going downwards, and I think gold in that case was going upwards. Yeah, do you see that? Gold in this case was going upwards. Do you see SMT divergence? That just strengthened this trade. I would have seen this if I was trading. SMT. I would have seen this if I was trading. There's an SMT, a liquidity sweep, inverse fair value gap, and a change state and delivery. This is an A+ setup, okay? This is my trading strategy. I taught it for free. Go watch the video. Actually, I'll forget to do that. Watch it at the end. I'll have end cards. All right. So here, this is a trade I took today. All right. I tape trade this. I'm not going to lie to you guys. I'm not going to be like, oh, I live traded this. I tape traded this. But here's literally why I entered. Okay. I saw an order block get hit. Okay. So like I said, you have to wait for the change state of delivery. I waited for the change state of delivery on the 15 minutes. Boom. Right. I missed it. Okay. So I missed this change in state of delivery. I started trading around here, right? Because I was off the markets for a bit. I usually start trading around 850. But yeah, see how I missed it? There's no reason for me to enter here. So I waited for a fair value gap to be formed on the 5 minutes. A fair value gap was formed. Okay. Do you see how it keeps bouncing off it? It's so perfect. I see a fair value gap formed, and I see a reaction off it. Boom. So I actually entered here. So boom, I see a reaction off it. So I decide, hey, I'm gonna short. I short. I put my stop loss at the top over here. Usually it's at the. Okay, never mind. It's gonna get confusing. But yeah, and I target this sell side liquidity on the 1 hour. I took another trade on my phone too. I'll show you guys how it went. And this didn't go there. I think. No, I didn't place it there. I placed it on the 1 hour liquidity sweep. So right here. So I rearranged it. Okay, 1 hour liquidity sweep right there. Okay. Boom. Do you see? The reason why I entered that trade is because I saw that this move kept continuing, and I saw this right here, this fair value gap. I was looking for a buy actually here if this fair value gap got inversed, but it didn't. It respected that fair value gap. Boom. So now I'm going to assume that it's going to keep going downwards. It went down. It formed a fair value gap. I entered off the retest. It kind of disrespected it a bit, but not by too much. And I wasn't too worried about it. And it went down, right? Boom. So now this trade, I saw the liquidity sweep on the 1 hour. Wait, frick. Okay, I saw the liquidity sweep on the 1 hour. Okay. Boom. 1 hour liquidity sweep. There's no fair value gaps for me to look at. So this was kind of a weaker confluence trade. So I would put in less money for it. I saw a change in state of delivery on the 5 minutes. As soon as this candle closed, I entered into a long position because I just know. I targeted exactly here. And you want me to tell you why? Because of standard deviation. Right? Wait, what the frick? On my phone, it looks different. Maybe I entered at a different time. But I saw standard deviation on the... Oh, right here. I think. I don't even know. I entered on the standard deviation right there. Alright, so... And my stop loss was at the end of this fair value gap. Alright, so this was a kind of like a less probable setup, but it still worked. I saw a liquidity sweep, a change in state of delivery. I entered off the negative 1.5 standard deviation because of the fact that it just market moves with algorithms, right? How am I doing on time? 15 minutes. Okay, boom. I just taught you guys the most important ICT concepts that you would ever need to know in 15 minutes. I saved you like 30 episodes of like 31-hour episodes of ICT and TJR. Okay, if this does not deserve a subscribe, I don't know what will. Okay, subscribe, leave a like, comment, and yeah, I'll see you. Join the Discord.